We're living in a different world now. Trade is part of it. Trade is the least important part of it. Technology is very important. It gives economic strength. It gives military strength.
He has been called one of the great investors of our time, Ray Dalio.
I think that in an evolutionary way, over the next 1, 2, and 3 years, that there will be a turn for the worse.
That's not the case. So my strategy is I invest in things that's going to change people's lives. That's the first thing I look at.
I always borrow to invest. I use debt to invest. To do that, you've really got to have a lot of financial education. I don't recommend it, but it's the best way to get rich.
You can see it in Europe, and you can see it in the United States.
Get a job. Well, jobs are disappearing. Is that with artificial intelligence and G5 coming, more jobs are going to get wiped out. Plus, with driverless cars, more jobs are getting wiped out.
This is a real sport, and people are going to figure it out really, really quick.
A lot of people who bought into teams, not just esports themselves, had no idea how bad a business it was. Owning a team is an awful business.
15 technology companies to invest in for 2022. If we take a look at the NASDAQ Composite Index, which includes almost all stocks listed on the NASDAQ Stock Exchange, we'll notice that it's largely ruled by tech companies. That shouldn't come as a surprise. The pandemic has pushed us into a more digitalized world, giving a massive boost to tech giants and smaller companies across the globe. So, if you're looking to expand your portfolio in 2022, a tech company might be a perfect choice. Even among those, you have some that will continue growing in the following year and onwards, and some that won't manage to stay afloat. How do you make the right choice with thousands of options out there? We've followed the stock market and its trends closely, and now we can help you make a decision. But before we begin though, we'd like to introduce you to our newsletter. With so many other distractions available at your fingertips, you need something smart and simple to help focus on what matters most. You want more than just another email. We offer intelligent insights that save you time, energy, and resources. Our newsletter carefully curates business intelligence, financial news, technology intelligence, and actionable advice, delivered fresh every month to your inbox for free. You can subscribe to our newsletter by going to our website at intelligentencounters.com, or just click the link in the description. One, Alphabet Inc. Google's parent company, Alphabet, has had an absolutely fantastic year. In fact, it's been their best since 2009. The corporation's stock is up 65%, leaving all other competitors far behind. The closest to Alphabet's growth is Microsoft, yet with the gain of 53%, it certainly has no hope of catching up. Such growth may sound surprising, but things become clearer when we consider that Alphabet holds both Google and YouTube. Google is by far the most popular search engine in the world, and the company offers a variety of services that have become indispensable nowadays. YouTube stocks alone have surged by 43%, as the platform has virtually become a replacement for traditional television. And during the pandemic, both of these divisions got quite a boost as consumers from all over the world lived their lives largely on the internet. But this trend isn't just limited to the pandemic. Of course, lockdowns and quarantines have forced us to rely on digital solutions, but that only sped up the process that was already ongoing. Now that we have entered fully the digital age, Alphabet is certainly one of the best companies to invest in. And its continued research into artificial intelligence and self-driving cars will definitely cement it at the top of the stock market for many years to come. 2. Zoom. If a single company benefited from the pandemic, it's definitely Zoom. The video conferencing platform gained an incredible boost in 2020 when its shares grew by 1,000%. By now, that growth slowed down. It's still up over 215%, but that's nothing compared to last year. Because of that, many investors feel that Zoom's glory days are over. But in our opinion, that's not the case. While the number of smaller customers is no longer as large as before, companies and corporations still turn to Zoom for their communication needs. That no longer includes just video conferencing. Now, the platform is hoping to offer all kinds of communication solutions. If the company continues developing its features the way it has so far, we can expect it to become a dominant video conferencing platform in the corporate world. In that case, its stocks are sure to grow, so buying them right now might bring some serious long-term profit. 3. Meta Platforms. This year's headlines were full of Facebook's sudden decision to change its name to Meta. The According to Facebook's founder, Mark Zuckerberg, the tech giant was branching out, and the name was no longer representative of the company's image. After all, Facebook isn't the only platform this corporation owns. Now, Instagram and WhatsApp are under its wing too. After the name change, some skeptics claimed this rebranding was the company's attempt to distance itself from the controversy around privacy and spreading misinformation. Whatever the case, the fact is that 3.5 billion people use Meta's platforms, whether it's Facebook, Instagram, or WhatsApp. That number is sure to keep growing, and other exciting projects are surely in store. So, if you want to be a part of that, buying Meta stocks might just be the way to go about it. 4. Amazon. The largest online retailer in the world and the leading provider of cloud computing infrastructure is undoubtedly Amazon. Its online store may not have grown much over the past year, but other Amazon services certainly have. The subscription services, third-party marketplace, and Amazon Web Services have all recorded double-digit revenue growth. And according to analysts, Amazon's revenue and earnings will keep rising next year as well. The growth may stabilize a little, but ultimately Amazon is sure to remain dominant in its industry. Thus, investing in it shouldn't pose that much of a risk. 5. Shopify. There's hardly an e-commerce solution that's quite as effective or popular as Shopify. This Canadian company has it all: excellent site design, payment and checkout capabilities, marketing options, and everything else its users need to run a successful business. Considering that online entrepreneurship has been on the rise in the last few years, Shopify is undoubtedly experiencing quite a boom. The numbers confirm this too. In the last quarter, Shopify's revenue jumped by 46%. Both the revenue and the user base are expected to grow in the following years. And since it's a hassle to move from Shopify to a different platform, it certainly has staying power. Thus, you can't go wrong with investing in this company that's already revolutionizing the meaning of e-commerce and is sure to keep it up that way for years to come. 6. Electronic Arts. Moving into the gaming industry, which seems to be unstoppably growing every year, there's one name that instantly comes to mind. Electronic Arts, or EA for short, has been around for decades with numerous fantastic gaming franchises under its belt. Who hasn't played, or at least heard of FIFA, The Sims, or Formula 1? By now, these and other EA games certainly deserve to be called classics. Despite this legendary status, EA's stocks have been underperforming in 2021. Right now, they're selling at a low price, around $132. That means acquiring a few shares won't be too difficult, nor will it empty your wallet. Is it worth it to invest in EA though? Well, we expect quite an optimistic future for the company. Over the next few years, Electronic Arts earnings are likely to double, especially once it starts producing next-generation console games. In other words, EA offers cheap stocks whose value is sure to grow over time, and there's hardly a better investment than that. 7. Zynga. While we're on the topic of gaming, we certainly have to mention Zynga, another video game developer that many investors bet big on in 2021. Unfortunately, those who did were disappointed. The company's share price fell by roughly 35% this year. That's likely due to stricter standards for targeted advertising in video games, which has been one of Zynga's main revenue streams. Still, the future is looking brighter for this mobile gaming and social networking company. Zynga has excellent development resources and marketing team, and its strategies for keeping the players engaged and willing to spend are quite effective. And while these positive sides might not yet be so obvious when looking at the stock market, we're sure they will be. Plus, Zynga stock is so cheap right now that there's absolutely no reason not to buy it. 8. Unity Software. There's hardly a platform as popular for developing video games as Unity. About half of all console and PC games and 70% of all mobile games were developed in it. As if that's not enough, Unity may be the biggest beneficiary of virtual worlds and metaverses. After all, its engine might just be what we need to build the metaverse across various platforms. And once that's done, the software is sure to make quite a profit. But for now, the share prices are low enough to comfortably purchase at the beginning of 2022. They are sure to pay off too. You just have to be ready to hold the stocks for a few years before you see the results. 9. Microsoft. When it comes to investing, Microsoft is a pretty safe bet. Windows is to this day the most widely used operating system in the world, and the Office productivity software holds near monopoly in its domain. On top of that, Azure, Microsoft's cloud computing infrastructure provider, is second only to Amazon Web Services. If that's not enough to convince you to invest in Microsoft, we should mention that in the last 6 years, Microsoft's profitability doubled. That's not an easy feat for a corporation of that size, but it has been possible thanks to its CEO's wise leadership. So, as long as things keep going this way, your decision to buy Microsoft stocks will surely be a good one. 10. Uber Technologies. During the pandemic, Uber, the transportation and logistics corporation, took quite a hit. Lockdowns meant people had to stay home, so ride-hailing wasn't exactly necessary. But now that the world is slowly getting back to its feet, Uber is once again everyone's first choice when they need a ride. Aside from that, the company has started several other ventures. Its food delivery service is thriving, and Uber Freight is looking to streamline the massive market of shipping and hauling. In the long run, that's sure to bring some profit both to the company and its investors, and there's hardly a better time to invest than now. 11. Apple. Microsoft's toughest competitor is, without a doubt, Steve Jobs' brainchild Apple. With iPhones, iPads, and Mac computers among Apple's products, it's clear why this tech giant is as popular as it is. After all, their superb designs and excellent features ensure unparalleled customer loyalty and repeat buyers. Recently, Apple has decided to push its own limits and expand its selection of services. Now, those include Apple Pay, Apple Music, Apple TV Plus, Apple Fitness Plus, and more. As the company keeps growing, so do its customer base and profits. So, just like in the case of Microsoft, Apple is a pretty safe bet, and investing in it can bring you some serious money over the years. 12. Netflix. Over the years, Netflix has become a real streaming giant, currently counting over 200 million subscribers. The company also invests billions of dollars each year to produce new content and attract more watchers. Its selection of shows and movies has become more diverse, with the aim of drawing in audiences from across the world. And their business model seems to be working. Despite the tough competition, Netflix still sits at the top. But isn't it too late to buy Netflix shares now? Surprisingly, they aren't too expensive. Its earnings are still growing, so the prices are a relative bargain. Of course, they are pricier now than they were 5 or 10 years ago, but their value is higher as well. So if you haven't invested in Netflix yet, now might just be the right time. 13. Intel. As one of the largest semiconductor companies in the world, Intel manufactures central processing units, CPUs, for computers. In other words, as long as we use PCs as they are now, Intel's products will be necessary and the company will thrive. But Intel isn't putting all its hopes exclusively on CPUs. The company also started producing specialty chips for artificial intelligence, which are sure to become quite sought after in the following years. Intel is also planning to fully commit itself to manufacturing and making chips for other companies. And if that's what lies in store for Intel, you can be certain that its revenues and earnings will grow. Your profits could too, especially if you seize the opportunity and invest now. 14. Cisco Systems. In many ways, Cisco Systems provides the backbone of the internet. After all, the company manufactures, develops, and sells hardware, software, and telecommunications equipment. In fact, many consider Cisco to be integral to the growth of Silicon Valley, so its importance is indisputable. But does that make it worth investing in? For 2022, that certainly does seem to be the case. According to many parameters and analyses, Cisco's shares will be moderately sought after, and it will be the perfect time for buying. Its relative strength rating is 87 out of 99, making it one of the best stocks to own. So why wait a moment longer? 15. Asana. Asana is yet another company on this list that received a boost thanks to the pandemic. Its workspace collaboration software helped its shares advance by more than 280% in 2021. In fact, ever since its debut on the market, Asana has performed exceptionally, and it's only just getting started. There's plenty of room for growth and improvement, meaning that it's a perfect addition to your long-term portfolio. On top of that, Asana's shares are less expensive than its competitors, thanks to its impressive growth and improving profitability. In other words, if you buy now, you can expect long-term gain for a low cost. Well, there you have it. 15 technology companies to invest in 2022. Thank you so much for being a part of our community. And if you haven't already, don't forget to subscribe to our newsletter to gain immediate access to highly curated intelligence. Sign up to our newsletter by going to intelligentencounters.com and receive cutting-edge insights delivered fresh each month directly to your email inbox for free. Here are some other videos that we suggest you watch next. See ya.